Good afternoon, everyone, and welcome to our presentation today regarding superannuation guarantee. My name is Ali Suleiman, and I am the tax advisory partner that heads up our employment taxes service offering. I will be presenting today with Alena Bogomolova, a senior manager in our employment taxes team, who has significant experience gained from practicing within the profession and the SRO. We will also be joined in today's presentation by Gary Matthews, who has vast experience also in all employment tax matters, having had the added insight of working within a corporate environment, as well as the SRO and professional practice. Today's presentation was something we had originally slated for March as part of our combined and usual briefing with FBT, and it was something that I was hoping to do in conjunction with our colleagues in the consulting team, where they undertake broader payroll system reviews and support. At that time, wage underpayments and reputational risk was such a big issue for employers. However, given all that has transpired since March, we decided to separate our presentation, not only today, but also with respect to the FBT briefing. The FBT briefing was presented earlier in the year in April. So today we are talking about superannuation guarantee matters only. Since March, businesses and people alike have been forced to deal with changed operating conditions, disrupted supply chains, working from home, homeschooling, as well as social distancing, are not only catchwords and buzzwords used, but social and business conditions we have all had to get used to. Government stimulus measures were announced to help businesses teetering on the edge of extinction, and business owners, operators and their team have been focused on these stimulus measures and general business or commercial issues. It has meant that clients and advisors alike haven't been able to focus on some of the usual annual tax compliance measures, at least in a timely fashion, and we noticed that with the FBT lodgement program. However, whilst the stage 4 lockdowns announced this week serve as another disruption for many Melbourne-based businesses, we thought we should progress with this presentation on superannuation, if only because we would like to discuss with you the generous amnesty concessions available for employers that exists until September 7. There's around 1 month to go to take advantage of these concessions. So what will we be covering today? In today's agenda, we'll be looking at an overview of employer superannuation obligations. We will look at some of the common errors the ATO are focusing on. We will consider the consequences of not paying on time before moving on to look at the concessions provided by the superannuation guarantee amnesty in some detail. And as part of that, we'll consider a case study, which will flesh out some of the benefits of the concession, of the amnesty. We will also look at some recently introduced rules around salary sacrificing superannuation and look at the interaction also between superannuation guarantee and the government's JobKeeper program, before closing with some of the ways that we can assist you and your business and some of the tools that we've developed as part of that process. So if we start by asking, what are the superannuation guarantee requirements for employers? Employers generally must pay superannuation contributions to satisfy the superannuation obligations based on the ordinary time earnings of their eligible employees. An amount of ordinary time earnings, OTE, is effectively a subset of an employee's salary and wages. If it's not salary and wages, then it can't be ordinary time earnings. But that doesn't tell us what ordinary time earnings are. Luckily, the Superannuation Guarantee Administration Act is useful for that, and it defines the total earnings in respect of the ordinary hours of work, other than those earnings consisting of a lump sum payment made to the employee on the termination of their employment. So key to this definition then is understanding what the meaning of the ordinary hours of work are. But that's not defined within the legislation, and so the ATO has provided a useful ruling where it fleshes that out. In that ruling, the ATO says that this requires reference to the relevant award or agreement for the employee or a combination of such documents to assess the conditions of employment of the employee. The superannuation contribution that's required is set at 9.5% of that ordinary times earnings base. Confusingly, when payments are made late, that 9.5% base is based on 9.5% contribution is based on the total salary and wage payments. So the penalty of paying superannuation late or underpaying superannuation is that 9.5% is then calculated on potentially a greater number, being the overall salary and wages figure, as opposed to the smaller subset, which is the ordinary times earnings figure. If you pay on time, the relevant base is ordinary time earnings. The thing to also note about payments, they are consistently required to be made on the 28th day of the month following the end of the quarter. So for example, for the March quarter, payments are required by April 28. A lot of clients get the December quarter payments confused. Rather than paying by the 28th of January, payments are often made before the 28th of February, which coincides with the BATS lodgement dates. But there's no extended deadline here, and there's no discretion for the ATO to allow extended periods as well. The other important factor to consider, and it's noted there on the slide, is not the date that the payment is made, but it's the date that the payment is received by the superannuation fund. So to the extent that the superannuation fund receives the payment after that 28th day of each of those relevant months, so the superannuation in respect of that quarter, to the extent it's received after that due date, there's no discretion afforded to the Commissioner or the ATO under the legislation. The payment is deemed to be made late. Admin fees and interest accrue on that late superannuation until the superannuation guarantee charge statement is lodged. We've seen on countless occasions employers have attempted to do the right thing. They've paid a superannuation clearinghouse, often a few days prior to the 28th of April, but the processing time required at the clearinghouse end, including any errors that might occur, often then the processing time at the clearinghouse, then the processing time from the bank that the clearinghouse uses to get the money into the relevant superannuation fund of the employee, that can take more than the 2 or 3 days that the employer has allotted for that payment to be made. If it takes 4, 5, 6 or 7 days for the payment to be made into the superannuation fund, it's quite a simple little scenario where the payment's actually received late by the super fund, and penalties and those outcomes that I talked about with interest accruing result. And there's also non-deductibility associated with the payment of the superannuation. Eleanor will discuss these things further and flesh out a late payment example shortly when we discuss the superannuation guarantee amnesty shortly. In terms of what the ATO is currently focusing on with regard to superannuation, they look at whether or not you've correctly categorised all of your employees or contractors. So that is, have you engaged contractors who will ultimately be deemed to be employees under the superannuation legislation? Under the relevant superannuation legislation, the Superannuation Guarantee Administration Act, the definition of employees is extended to include individuals or persons that have been engaged wholly or principally for their labour under a contract that may not be described as an employment contract. So the key there is identifying who has been engaged wholly or principally for their labour. In determining whether or not payments are wholly or principally for the labour of a person, 3 general factors are cited that should be considered by the ATO in a ruling they've put out on this matter. 1, whether the terms of the contract indicate that the individual is remunerated for their personal labour and skills. 2, whether they perform the work personally without any right of delegation. And 3, whether the individual is not paid to achieve a result. So looking at those 3 factors, if you are remunerated for your personal labour and skills, and you do perform the work personally without any right of delegation, and you're not paid to achieve a result, then the contract will be deemed to be engaged wholly or principally for your labour, and to that end there'll be superannuation. The payments to you will be superable. The ATO ruling also makes it clear that if the contract of engagement is with an entity such as a company or a trust, then there is no employer-employee relationship for the purposes of the superannuation guarantee legislation, whether under the common law or the extended definition. So that's something that's interesting to note. So if you engage a contractor that's an individual, there is a risk under the wholly or principally for their labour test that they will be deemed to be an employee, and payments to those individuals will be superable. But if you engage a contractor through their own company or through their own trust, then the ATO make it clear in their ruling that the transaction and the payment to that company or trust is not superable. Moving on to consider whether the ordinary hours of work are clearly defined, it is common for most awards and agreements to clearly define the ordinary hours of a worker. And it is also common for those same awards and agreements to state those hours that are worked in excess of ordinary hours and to describe them as overtime. Now, in terms of what is ordinary hours, it doesn't need to be your usual 9 to 5 Monday to Friday. Ordinary hours may involve work during other times and may involve work outside of those regular hours. The ATO ruling progresses on the assumption that all payments are ordinary time earnings unless it is clear in the agreement or the award that it is otherwise. This involves consideration as to whether there's a genuine distinction between the ordinary hours of work and other hours, and in terms of the other hours, generally the distinction involves higher rates of pay. In the absence of a clearly defined clause in the award and agreement about ordinary hours, we need to consider whether regular customary shifts or hours worked by the employee, whether they're always worked such that they become the ordinary hours of work for that particular employee. So in terms of considering the ordinary hours of work, we look at the industrial awards, we look at the relevant enterprise bargaining agreements, and we also look at what's customary in terms of the type of work and the hours of work performed in that industry or that workplace. Moving on to consider some specific types of payments. The ATO website now clearly states their view that annual leave loading will be considered to be ordinary time earnings unless it's specifically referable as being paid to compensate for missed overtime hours or overtime rates. So this is a little bit of a departure from the past, and it's obviously created a little bit of attention in news circles. In terms of directors' fees, they're specifically included in the definition of ordinary times earnings. If we look at the definition that extends payments to individuals as contractors, there's also a section there that says that directors entitled to payment for the performance of duties as a member of the executive body of the company, those payments will be superable. So there's a clear definitional inclusion for directors' fees. In terms of allowances, what's relevant to consider there is whether the allowances relate to overtime work or to the reimbursement of expenses. If so, if they relate to those two items, then they won't be treated as ordinary time earnings. But to the extent it's not stated what they relate to and it's not clear that it's a reimbursement of expenses, then they too will be treated as ordinary time earnings. Similarly, bonuses, most will be ordinary time earnings unless it relates to payments for work performed entirely outside ordinary hours. For example, the bonus might be a reward for a special project undertaken outside of ordinary hours of work. An interesting point to note is that in the ruling, the ATO state that to the extent that the bonus is even partly referable to work performed as ordinary time earnings, then the whole amount will be treated as OTE and subject to superannuation. And finally, in terms of what the ATO is focusing on, and it seems like an eternity ago now, late payments. Earlier this year in February, the ATO notified around 2.5 businesses with letters where they had sought some clarification about whether their payments to employee superannuation funds had been made late. Now, these letters came on the back of the increased information flow to the ATO. So not only from single touch payroll information, which is provided from the employers, but also from the increased reporting that the superannuation funds themselves, they now can report payments to the ATO and when they've been received. So in light of that extra information, in a data-driven environment, the ATO are profiling taxpayers and sending out targeted queries in the form of those 2,500 letters. And particularly given the ATO criticism that they've taken a light touch to late payments or underpayments of superannuation by employers, you've got a regulator that's keen to make amends and keen to show that it is enforcing these rules quite stringently. So after the period of amnesty, expect the ATO to target employers much more diligently. Now I'll hand over to Eleanor and she'll continue the next part of our presentation.
Thank you, Ali. Hello everyone, and thank you once again for joining us for this webinar. Hope you will find it useful, and as Ali said, please don't hesitate to reach out if you have any questions. Now I will take you through the consequences for employers of not paying superannuation on time to their employees. This could be a result of a late payment or underpayment of superannuation. In those circumstances, to discharge their obligations, the employers have to lodge a super grantee charge statement with the ATO for each affected quarter. In this statement, the employers have to calculate three components. First, amount of shortfall. This amount is calculated on total salary and wages, not just on ordinary time earnings. So if there are substantial overtime payments to employees, the amount of shortfall is likely to be higher than the usual amount of superannuation payment. For example, we had a client who we have prepared super guarantee charge statements for, and this client had about 40% of overtime payments in each period. So this client's shortfall was significantly higher than the usual superannuation amounts. The second component is interest, which is calculated at the rate of 10% per annum from the first day of the affected quarter until the date of lodging super guarantee charge statement with the ATO. Those two components will be payable to employees to compensate them for not having their superannuation in their superannuation funds on time. The third component is a $20 admin fee. This amount is charged on per employee per quarter basis. This fee is payable to the tax office for processing the super payments into employees' super funds. Once the super guarantee charge statement is lodged, depending on the circumstances and the level of culpability of the employer, the ATO may impose penalties on the super guarantee charge statement. The penalty can be up to maximum of 200% of the super guarantee charge amount. So it could be quite significant. A further punitive measure in relation to super guarantee charge statements is that super guarantee charge amount and penalties are not tax deductible to the business. So as you can see, making mistakes with super payment can be quite costly for employers to rectify. Where employers made a number of consecutive late payments, there are certain mitigation strategies which are available in order to reduce overall super liability. One strategy, which we call cascading, involves recharacterizing late payments as early payment for a subsequent quarter. The success of this strategy depends on particular circumstances of the employer, and it works better for some than for others. For example, for one employer, such recalculation resulted in about 40% reduction in their super guarantee liability. So we always recommend assessing whether this strategy is applicable. Now I would like to discuss super guarantee amnesty. Superannuation guarantee amnesty was announced by the government back in 2018. However, it has taken the government almost 2 years to pass the legislation to affect the amnesty. The amnesty provides a one-off opportunity for employers to correct any historical super guarantee errors they may have and provide significant concessions to employers who will make voluntary disclosures to the ATO and pay their outstanding liability. Treasury Law's Amendment Recovering Unpaid Super Act 2019 has been passed by the Parliament and received royal assent on 6th of March 2020. The legislation stated that the amnesty will end 6 months from the date of royal assent, which will be on the 7th of September 2020. I would like you to focus on this date. Today is the 6th of August. So there is only 1 month left for employers to review their super guarantee compliance and take advantage of the amnesty. So what concessions does the amnesty provide? There are effectively 3 main benefits for employers. First, The Super Guarantee Amnesty provides exemption from the $20 admin fees. Second, no penalty will be imposed in respect of voluntary disclosure. And third, Super Guarantee charge amounts become tax deductible for the business. This is probably one of the main benefits of the amnesty. Importantly, please note that the amnesty will apply to payments for all quarters from 1st July 1992, which is the commencement of Super Guarantee legislation, to 31st March 2018. This is when the Super Guarantee amnesty was first announced by the government. So, for example, any issues identified for periods post-March 2018 will not be covered by the amnesty. From our experience, we have seen that the ATO has continued with their usual enforcement activities during the amnesty period. And please note that if the ATO has started a Super Guarantee audit of the employer would lose the benefit of the amnesty. What happens if an employer does not disclose their shortfall of superannuation to the ATO during the amnesty period and the ATO later discovers the shortfall? The legislation which has introduced the amnesty has provided for a minimum penalty of 100% of Super Guarantee charge amount to be imposed and a denial of deduction for the employer in those circumstances. I would like to take you through a case study which shows the benefits of the amnesty and risks of additional liability which could be imposed if an employer does not take advantage of the amnesty. I call this case study disclose or not disclose. So my facts are as follows. Employer made superannuation contributions after due date. So the employer had late payments of super and now has to lodge Super Guarantee charge statements with the ATO. I'm going to assume for simplicity here that the employer has a simple payroll and their ordinary time earnings are equal to salary and wages. That is, there are no overtime payments. Super Guarantee charge statements are lodged on the 1st of March 2020. So this is important for calculation of the interest. Specifically, my facts are that the employer has made late payments in 3 quarters: March 2016, in March 2017, and March 2018. There are 100 employees in each quarter, and the total shortfall amount was 100,000 per quarter. So the shortfall for the 3 quarters is 300,000. The interest was calculated from the 1st of January in each respective year, so from the first day of the affected quarter, and up until the 1st of March 2020, which is what I have assumed when the Super Guarantee charge statement have been lodged with the ATO. The admin fee component is $2,000 for each affected quarter, being $20 per employee for 100 employees. Apologies, this slide is a little bit busy with numbers. So the numbers on the bottom of the slide are the actual facts which we just went through before. I just wanted to have them on the same slide so it's easier to understand the numbers in my scenarios. So in my case study, I have considered 3 scenarios. First scenario shows what is the total cost for business if there was no amnesty. The second scenario looks at the total cost for business and benefits of disclosing during the amnesty. And the third scenario shows the risk of additional liability if an employer does not make a disclosure during the amnesty period. So let's start with scenario 1. Super guarantee charge amount is going to be 396,000, being 300,000 of shortfall, 90,000 of interest, and 6,000 of admin fee. As in our example, the employer has already paid 300,000. The remaining liability on the super guarantee statement is 96,000. We assume that no penalty was charged, and also the additional cost to business is loss of a deduction for the super guarantee charge amount, which I have assumed to be 30% of 396,000. So I'm assuming that business's tax rate is 30%. So my loss of deduction calculation is 118,800. So based on that, the total cost for the business is 214,800. Now let's have a look at scenario 2, where the employer makes a disclosure during the amnesty period. Super guarantee amount is 390,000. So the admin fee component is waived. The amount payable on the super guarantee statement is 90,000, and there is no penalty imposed. And a deduction for the super guarantee charge amount of 390k is available. So you can see that the total cost to the business is negative due to availability of deduction. For the purposes of this example and calculations, we have assumed that deduction was not claimed in the prior periods. So it is available in the current period. However, of course, if it has been claimed before, it's no longer available in the current period, but the benefit is still there for the business. So now let's take a look at scenario 3, where no voluntary disclosure was made during the amnesty period. The super guarantee charge amount is 396,000, and the amount payable on the super guarantee statement is also 96,000, as is in scenario 1. In this case, however, the penalty of 100% of super guarantee charge amount is imposed, and the deduction is denied for the super guarantee charge amount and the amount of penalty. So you can see that the total cost to the business is in excess of $729,000. So you can see from these examples that there are obvious benefits of disclosing super guarantee shortfalls during the amnesty period, and the risk of additional exposure if these super guarantee shortfalls are discovered by the ATO at the later stage are quite significant. Please reach out if you have any questions in relation to your business's super guarantee obligations and if the necessary review or calculations are required. Now I will pass it on to Gary Matthews, who will provide a summary of what the employers should be focusing on in relation to their super guarantee compliance, as well as will provide updates in relation to recently introduced integrity provisions regarding salary sacrificing of superannuation and interaction of super guarantee and JobKeeper payments.
Thanks very much, Eleanor. Hello, everyone. With the deadline under the Super Guarantee Amnesty fast approaching, it's prudent for employers to review their own circumstances and ensure that they are or have been meeting their obligations. And in doing so, there's probably 4 key areas to consider. And they are firstly, the timeliness of payments. Secondly, the coding within the payroll system. Thirdly, compliance with relevant awards and EBAs. And finally, reviewing payments to individual contractors. So let's consider each of those. Firstly, the timing of payments. Now, as you would be aware, under the super guarantee legislation, you must make payments by the 28th day after the end of the quarter. Now, the relevant consideration is when the payments are received by the employee's superannuation funds. So regardless of when you make the payment, you must consider when the payments are received by those funds. And if they are even received 1 day late, they're considered to be late payments under the SG legislation, and you will need to take action. So it's not a case of looking at when you made the payment, not a case of when it was received by the clearinghouse, but when it was received by the applicable employee's superannuation funds. Okay, now the second area to consider is in relation to the payroll system. Now you will make various payments to employees, including payments for ordinary time, for public holidays, for sick leave, and for overtime. You may also make payments for various allowances, for shift loadings, or even you may have a leave loading. Now each of those needs to be appropriately coded as far as super is concerned as to whether or not they are ordinary time earnings and therefore attract super, or whether they're outside of the ordinary hours of work and therefore do not attract super. And in our experience, there's probably a number of areas where employers tend to make errors, and they include in relation to leave loading. In most cases, leave loading should be subject to super. Allowances, including things like car allowances and whether or not they are subject to super. Often there are errors there. And things like payments on public holidays. So where an employee works a public holiday and say gets double time, just because they're getting double time doesn't mean it's not subject to super. If it is work, say, during the week, a Monday to Friday, it would probably fall within their ordinary hours of work and therefore be subject to super. So it's prudent, it's important to consider all the codes under the payroll system and ensure that you are complying with the SG obligations on those. One of the key considerations when reviewing super obligations is in relation to relevant awards and EBAs. Now, awards and EBAs, or enterprise bargaining agreements, will define the ordinary hours of work of the individual employees. So it will say what is the span of hours for ordinary hours, how many hours a week are ordinary hours, etc. So you should be reviewing those to ensure that you understand what are the employees' ordinary hours and how that is appropriately reflected in the payroll system. So if you don't have an award or EBA for the employees, then consider relevant contracts. And if there is no contract which defines what the ordinary hours of work are, then it will be the hours usually worked by the employee. So any hours which fall within ordinary hours, any payments for those should be subject to super guarantee. The final area to consider is in relation to payments to contractors. Now, you may engage various contractors to perform services for your business. Now, if those contractors are sole traders, potentially the payments may be subject to super. So generally, if you engage a contractor who works through a company, a trust, or a partnership, they will not be subject to super because you've engaged the entity and not the individual. But if you engage a sole proprietor, sole trader, then potentially there will be a super guarantee obligation if they are engaged wholly or principally for their labour. Now, typically we find the contractors that fall within the super guarantee obligations are going to be those who are individuals who personally perform the work and who are paid, say, a daily or an hourly rate and are engaged on an ongoing basis rather than for a specific result. Okay, so Joe Bloggs may work for you and he works 35 to 40 hours a week and is paid $50 an hour. Unless you can define a specific result that he is engaged for, potentially you will have an obligation to make super payments on his behalf. Now, the fact that there may be a contract between you and the individual contractor, which says that the contractor must assume all responsibility for super obligations, does not absolve you of any obligation. If the super guarantee legislation says that they are engaged wholly or principally for their labour, then you would have an obligation for those. So they're probably the 4 key areas in our experience that need to be considered. Now, in doing so, it's also prudent to be mindful of the fact that it only takes one individual complaint by an employee, a disaffected employee, that may trigger a superannuation review. And if that's the case, then if there are any of these issues, such as a late payment or an incorrectly coded payment in the payroll system, then potentially you will have an issue. And if you don't make a disclosure under the amnesty, potentially you will be hit with penalties of a minimum of 100%. The government has introduced new provisions which apply from 1 January this year in relation to salary sacrificing arrangements. Provisions have been introduced with effect from 1 January this year that apply to employee salary sacrifice arrangements. Now, these are integrity measures which essentially mean that employee salary sacrifice superannuation arrangements cannot be used to reduce an employer's super guarantee obligations. Now, in the past, where an employee salary sacrifice superannuation, the employer was only obliged to make super guarantee contributions on the reduced amount of salary and could use the salary sacrifice amounts to offset any super guarantee obligations. Now, these measures have been introduced to ensure that any salary sacrifice superannuation does not count towards the employer's super guarantee obligations. And secondly, the employer's obligations are calculated based on the employee's ordinary time earnings before any reductions for salary sacrifice super. However, if the employee were to salary sacrifice for other benefits such as cars, car parking, or expense payments, it's only the reduced salary after those reductions where super guarantee needs to be paid. So let's consider an example of how the integrity measures work. So in this example, we've got a total package of $116,500. That includes superannuation contributions. Now let's consider how that would work under the old provisions and now under the new integrity measures. Okay, so in the example, the employee contributes $4,000 pre-tax to a novated lease for a car and also elects a further $3,000 salary sacrifice superannuation. So that then leaves a balance after those two deductions of $109,500. Now, under the old provisions, the employer would only be required to contribute 9.5% of the taxable salary that remains. Now, in this example, that would equate to a taxable salary of $100,000 with employer super of $9,500. This could have even been further reduced by the employer taking into account the salary sacrifice super. So they needn't have contributed even $9,500. That could have been reduced by the $3,000 for the salary sacrifice superannuation. Now, under the new law, that balance of $109,000, we need to add back the $3,000 that was sacrificed for super, and effectively the package is $112,500, and out of that, the employer must contribute 9.5% super. So what that basically works out to mean is that the employer must contribute the equivalent of $9,760 as a super guarantee contribution, with the taxable salary remaining of $99,740. So effectively, under this new integrity measure, the employer contribution increases by $260 as a consequence of the $3,000 sacrifice super. The final area that I'd like to consider is in relation to the recently introduced JobKeeper payments and how they impact on super guarantee. As you would no doubt be aware, under the JobKeeper scheme, eligible employees of qualifying employers are entitled to a $1,500 payment per fortnight. Now, when the provisions were introduced, specific amendments were also made to the super guarantee legislation to make it clear as to what parts of those payments would be subject to super guarantee. Now, basically, it boils down to whether or not the employee works or doesn't work during a JobKeeper fortnight. If the employee works, then potentially any payments for services rendered will continue to be subject to super guarantee. However, to the extent that the employee is subsidised under JobKeeper, that is, top-up payments are made, then they will not be subject to super guarantee. So consider an employee who works for a fortnight and earns $2,000. As a consequence, because they've earned more than the $1,500 JobKeeper payment, the full $2,000 will be subject to super guarantee. But if the employee didn't work in that fortnight and the full $1,500 was effectively a top-up payment, then none of that would be subject to super guarantee. Now, the question arises as to where the employee only works such that they earn less than $1,500, how would that be treated? Well, let's consider some examples. Okay, so let's consider the example where an employee actually earns less than $1,500 in the fortnight. If that's the case, then the amount that they actually earn will be subject to super. However, any top-up payments to bring them up to $1,500 in the fortnight will not be subject to super. In this particular example, Ben earns $700 in a fortnight for hours actually worked. His employer then makes an $800 top-up payment to continue to qualify under JobKeeper. So Ben's employer must pay super on the $700 that he actually earns. However, in relation to the $800 top-up payment, no super guarantee contributions are required. As you may be aware, there is a specific exclusion under the super guarantee legislation for any employee earning less than $450 in a month. As a consequence, if an employee earns less than that amount, then you do not need to make any super contributions whatsoever for that month. Now, where under JobKeeper, the employee continues to earn less than $450 in the month for work actually performed and then receives top-up payments under JobKeeper, there still is no obligation for super whatsoever on the actual payments for work performed or the top-up payments. Let's consider an example of that. So in this example, Grace earns $200 in a fortnight for actual work performed, and that equates to a total of $400 in a calendar month. Her employer makes top-up payments each fortnight of $1,300 to continue to qualify for JobKeeper. Now, in this particular example, because Grace's earnings for actual work performed are less than $450 in the calendar month, there is no obligation under super guarantee under the general exclusion. And secondly, the top-up payments she receives under JobKeeper are specifically excluded as well under super guarantee. So there's no obligation to contribute anything on the payments to Grace in that particular month. I'll now hand back to Ali. Thank you.
Thanks, Gary. So in terms of support that we can provide you as employers and your businesses, we can help determine and calculate whether superannuation has been correctly paid on the right ordinary times earnings base. We can also help determine whether payments have been made on time, and we can look at the best strategy to employ in order to rectify any possible non-compliance. In this regard, I'm excited to actually announce that we've developed an SG Analyzer tool, which greatly assists us in determining the exposure that employers and their businesses may have for any given period in this way. The tool greatly assists us to automate volumes and volumes of superannuation calculations, but having said that, it still requires us to understand all of your various pay codes. So it still requires experts like Eleanor and Gary to work through all the different payment codes and payment matters and make sure that the way that they've been treated is correct from a superannuation standpoint. Having properly set up and managed the data that goes into the tool, it greatly assists us in pushing through the many calculations and eases not only the resource pressure on your business, but also on our internal staffing on the matter. The SG Analyzer tool, together with our expert employment taxes practitioners, allows us to identify all the relevant superable pay items, identify all the relevant areas of non-compliance, and in doing so, it allows us to sidestep and manage the risks to you and your business associated with underpaying employees, and it also allows us to take advantage of the super amnesty concessions. Please be assured that we have rigorously tested the tool. It's quite robust, and in any case, we'll always sense check the outputs of the tool, whether by random sampling or otherwise. The other great factor associated with the Superannuation Guarantee Amnesty tool is that it allows for additional reports and visualizations to be provided, which helps provide a greater insight, if needed, if required, into where and why the issues may have arisen in the first place. When it comes time to generating the reports, the SGC statements for each employee to be sent to the ATO, again, having uploaded the data into our analyzer tool, it allows us to generate the SGC statements on a much more efficient basis and have it all ready for disclosure to the ATO. In concluding our presentation today, it goes without saying that now is a time of great uncertainty, particularly within the economic environment in Victoria. Prior to March, as you'll recall, there was much shaming of employers nationwide. Since then, obviously much has happened, but time is running out in respect of the amnesty which was announced in March. The amnesty runs out on September the 7th, as has been stated earlier, and following the end of the amnesty, you know that we'll have an aggrieved and slammed law enforcement agency that will be coming out to prove its detractors wrong. As I said before, in terms of the assistance we can provide for you, we can do as little or as much as you would like. We can help identify, calculate the underpayments, undertake a complete end-to-end processing of the work, including lodgement of the SGC superannuation guarantee charge statements, or alternatively, we can just simply review and double check the work that you've already undertaken, if that is the high-level scope that you wish for us to adopt. But please note, the superannuation guarantee amnesty, the opportunity is too good to ignore and should be taken advantage of by employers and their business alike. In terms of any queries you may have, please feel free to send them through, whether to Eleanor, Gary or myself directly, and we'll make our email addresses available on the final slide here, or happily reach out to your existing Feature Partners contact, and they'll be sure to direct the queries through to us. So thank you for your time this afternoon. I hope you found the presentation useful.